Hey everyone, welcome back to your weekly market outlook. This is for the 10th of March 2025, second week of March, and let's get this started with a recap of last week, which was a very interesting week last week. So we had the tariffs for Mexico and Canada pretty much in place on the 4th of March, and then we had a reversal on that. We had another pause on that for another month. So it does cause a lot of confusion in the market in terms of the risk. Where is it going to go? What is this tariff going to be? And I think all traders are still going to be looking for April 2nd, when the reciprocal tariff is actually going to be in place for pretty much every other nations out there. So yeah, those are the confusions coming out from Trump there in terms of how he wants to do the tariff. And obviously the market is not liking it. We had a huge dropout in the US equities. Not much of a crash per se, but it is a huge drop. I think there's a loss of confidence in the market, and we can see that across the board there, which is weird, where we actually saw the US dollar kind of weakened. Treasury yields also weakened, and then we had the euro performing the strongest gain in first time in 16 years. So it was all over the place there, and also in terms of data that came out, the NFE numbers was something that we need to talk about. The expectation for the NFE number last week, it kind of changes a lot, right? And we also mentioned this in the outlook last week, that the consensus has been shifting around, and I say we're looking at around 150,000 ballpark as the number, and we actually got that. The result was 151,000. Previous month's number was revised down significantly to just 125,000. So even though the number comes out below consensus, because the consensus was basically around 159 to 160,000, that was the final consensus before the data was released. We got 151,000, but we also had a downward revision on the previous month. So even though the number was actually below consensus, considering the revision, it was higher than last month, so that we actually saw that gain. Now, the unemployment rate ticked up a little bit, 4.1%. I don't think that causes a lot of, it doesn't have a lot of significance in the market. Average hourly earnings was pretty much stable at 0.3%. So overall data for that in terms of the labor market was kind of mixed, and I think a lot of traders was basically just confused. And judging by the volumes during the release themselves, I think a lot of traders was pretty much on the sideline because of what's going on the week with the tariff issues. So we actually didn't see a lot of price movement during the NFE release, which is kind of a relief because we were expecting huge and extreme volatility when the data was released because of what's going on in the market. The ECB has also cut rates by 25 basis points. They're going back into data dependent. There were a little bit of a change in terms of what the ECB mentioned. It's more or less restrictive. I think we can say that there's not a lot of concern in terms of inflation from the Eurozone, although they did lower the growth projection as well as the inflation projection as well on the Euro side. So again, it was a little bit more or less a mixed message, and we also had the whole Europe backing up Ukraine, and then we had the US cutting off military aids to Ukraine as well. So it does create that geopolitical tension a little bit last week. So it was a very interesting week last week. We saw the market basically just all over the place there. All right, this week, just a quick reminder, we do have the US daylight time savings. So every data release, depending on your region, is going to get shifted back an hour earlier. So just keep that in mind and make sure you change your the schedule release there for the news, depending on your region there. But in Australia, obviously, we're going to be moving back an hour earlier, okay? All right, so this week, what are we expecting here? We got Joel's job opening numbers. It was supposed to be last week, but obviously because of the whole February-March thing, this was actually going to get released on Tuesday. Then we have the inflation number coming out from the US. Now, for the headline inflation number, we're expecting a little bit of a drop from 3% to 2.9%. So we'll see what happens here. Core CPI expected to remain stable. Monthly changes in the CPI also expected to drop a little bit. And then we have the Bank of Canada interest rate statement. We are expecting 25 basis points from Canada. Again, I think this is expected by the market, so not really expecting any huge changes there. PPI number, core PPI expected to remain stable at this point in time. And then we have the UK GDP numbers. UK GDP numbers in terms of growth per month, we're expecting a little bit of a slowdown from 0.4% last month to just 0.1%. Consumer sentiment, this is something to keep an eye out for because the previous sentiment numbers does cause a lot of movement in the market. So this one here is going to be a high impact news. That's going to be on Friday. Again, we are expecting a drop in the consumer sentiment, but we'll see whether or not it's actually going to be a huge miss, just like last month there. All right, let's move on to the technicals here. Take a look at the Aussie USD, pretty much stable there within the Ichimoku cloud. Range unbroken, 62 cents to 64 cents. We're not looking at a lot of changes here. From a technical perspective, this is stuck inside the Ichimoku cloud. And we do expect price to still be traded inside the Ichimoku cloud. Range for this week, we're anticipating range between 62 cents to 63.50. We're expecting the Aussie USD to be stable at this point in time. It's not that the Australian economy is doing that well either. So this one here, kind of lock into position at this point in time. Euro USD, you can see the gain here on the Euro USD. We warned about the potential transition in the trend change, but in all honesty, I wasn't expecting a huge run like that. I think we had about close to 500 pip range on last week's price movement. So we had seen a gain of 500 pips. And this is a significant gain in the market and one that I doubt will continue to rise. At the current price level, between 1.08 and 1.09, I think the euro is looking exhausted. We do need a little bit of a technical pullback here to happen on the euro before buyers are going to be convinced that, okay, it's a much better price to buy it back in. Now, if we take a look at where the closest support is going to be, it's going to be 1.08. But below 1.08, it's going to be 1.06. So we're expecting a huge correction happening on the Euro USD should it fail to break above 1.09. If it does break above 1.09, we might see a run up to 1.1, but that's pretty much it on the Euro USD. So on the euro, obviously we had that transition happening, but because of that rally last week, which was the largest gain in a week, first time in 16 years for the euro, that was a significant gain, and I don't think this is actually sustainable at the current price level. So just keep an eye out on the euro USD. The trend has changed, but at the current price level, it's very hard to lift the euro up even higher at this point in time. So even if it does break above 1.09, it's likely going to be very limited at 1.1 at this point in time. Sterling here has gained a lot as well. We moved away from 1.2550, which was the previous order block. It was tested as support. A breakthrough, and one of the key things to note here, it actually slices through 1.28 easily, right? That was supposed to be the resistance on the sterling here. This one here pushes up a lot higher. Now, there are going to be two options here. Either sterling continues to hit 1.3 and then corrects itself to 1.28, or we're going to see that pullback to 1.28 to test support. And if it does test support at 1.28, I think there's a lot more traders that's going to buy in at around 1.28 to take this to 1.3. So those are going to be your options for the sterling here. This one here, again, has changed its trend. It has transitioned above the Ichimoku cloud, but I think this is due for a correction as well. Again, this is not sustainable at the current price level. If it does get lifted, it's likely going to be capped at 1.3. So keep an eye out on the sterling here. All right, lastly, we have the dollar Japanese yen. This one here is a tough one. Dollar yen, it's basically still at around that bullish order block area there. So we're still looking at this as a support. We did see spikes lower than 147 here. So we actually find 147 acting as a little bit of a support here, but overall, it didn't close below that bullish order block. So from a technical point of view, we're still going to be looking at this as a potential floor for the dollar Japanese yen. Not expecting too much here because of how negative the dollar has been, how the Japanese yen has actually gained across all the other currencies as well. But yeah, for this one here, we're still around that previous bullish order block there. So this is likely going to act as a support for the dollar Japanese yen. Any break below 147, we're still going to find support closer to 146. Basically, the weekly pivots are going to be a support level. And if you take a look at the range there, it might look small, but the difference between support 1 and support 2, it's very much about 2 yen. That's a 200 pip distance between support 1 and support 2. In terms of where the immediate resistance is going to be, that's where the pivot is going to be. That's at a psychological level as well, 148.75. Basically, we need to have a break above 149 for any sustained correction on the dollar Japanese yen. So this one here it's pretty much ambiguous at this point in time. It's very risky to start buying at the current price level. Also, at the same time, it's very hard to short it because we still have that bullish order block. Unless we clear off 146, I don't think a lot of traders are going to continue to short sell the dollar Japanese yen. At the same time, it's risky to pick the dollar Japanese yen up as well. The general trend for this one here is to the downside. You can see the transition below the Ishimoku cloud. Once it's transition below the Ishimoku cloud around 153, we basically have a continued drop on the dollar Japanese yen. But again, very similar to the Euro USD and the Pound USD, I think this is due for a little bit of a technical correction. Not a lot of traders are going to be shorting at the current price level unless we saw that breakdown below 146. All right. So that's pretty much it for this week. Good luck with your trades, and I'll see you soon.